A group that I'm going to call the Sticky Bandits are grouping together. These are General Motors, Stellantis, Hyundai, Kia, Honda, BMW, and Mercedes-Benz are joining forces to try to take on the Tesla supercharging network. Yeah, that's right. They plan to install 30,000 chargers starting along major highways and in cities to become the top charging station for electric vehicles. So to some degree, this is bullish for Tesla. But I think the Sticky Bandits are out of their league. Hell, they're not even on the team. The automakers did not specify how much they would invest individually or collectively, but said they would be open to additional investment or participation from other companies, including outside the auto industry. A name for the venture was not announced. But notice out of the Sticky Bandit group, GM and Mercedes have also signed on to adopt Tesla's charging technology from 2025 to get access to a larger share of its superchargers. But Stellantis, Hyundai, Honda, and BMW have not committed to the Tesla technology known as the North American Charging Standard, and have plans that rely on a rival known as the Combined Charging Station. This new charging company will support both CCS and the Tesla standard. I think this is a massive win for Tesla, and let me tell you exactly why. The Sticky Bandits seem to be biting off more than they can chew. Matter of fact, they're not even giving us any details on this new company and saying anyone can invest in this company. It's basically like a crowd-funded fund of money that has no purpose as of right now. No product, no site, no development, no nothing. So this is years and years down the line before you get a single charger that is likely in the ground that is operational. But more chargers, the better. The number one reason why EVs are not the most popular vehicles sold in America or around the world is because there's not enough chargers. And that's the number one thing that keeps a lot of people away from Teslas and other EVs. There's simply not enough chargers. Tesla finally confirmed Supercharger V4 has 350 kilowatt output. These have been getting deployed over in Europe for the last 4 months, and hopefully should be seeing more of them over here in America shortly. In other news, a Cybertruck was spotted in California with a bunch of wires and sensors, presumably calibration equipment. Have you ever had maybe the inside of your tires go bald and the rest of the tire was fine? Well, most of the time that has to do with alignment issues and axle issues. Well, Tesla is testing these vehicles to make sure none of those issues are present, making sure things are fine-tuned. So the last thing you want is to release a new vehicle that's been waited on for the last 4 years now and have a bunch of problems. Last thing that you want to happen. So this is more confirmation of real-world testing and getting the last tweaks figured out before we get some real deliveries coming later in this year. And finally, Chevy is bringing back the Chevy Bolt. The Chevy Bolt was the second most popular EV in the US in 2017. The most popular at the time was the Tesla Model S. Well, this vehicle was highly liked by purchasers at the time, but has since been discontinued from GM. Well, GM says that they are bringing this back with better margins than before, and it's going to be more affordable. Now, this is positive for Tesla. More EVs out on the road is a positive for Tesla. That means a couple things. More EVs, more chargers, more access to charging, more awareness of electric vehicles. Believe it or not, if you're in a big city, then you might not know this, but a lot of America has very little knowledge on electric vehicles. Most Americans have never driven an electric vehicle, let alone driven inside of an electric vehicle. Well, if you start to see a lot more Chevy Bolts out on the road, I promise you Teslas are a lot more appealing than this. That's going to be a benefit to Tesla.
Thank you, Mr. Chairman. Jeff Cox from CNBC.com. You and other Fed officials in the past have suggested that you don't need to keep hiking until inflation hits 2%, that as long as you see continued progress. So I'm wondering, how close do you need to get with the inflation numbers coming down? How many months of data do you need to see that will give you sufficient confidence? And how far does this fight need to go before you're willing to kind of declare victory on it?
So the idea that we would keep hiking until inflation gets to 2%, it would be a prescription of going way past the target. That's clearly not the appropriate way to think about it. So in effect, if you look at our forecasts, the median participant, and again, these are forecasting out years, so take them with a grain of salt, but people are cutting rates next year because the federal funds rate is at a restrictive level now. So if we see inflation coming down credibly, sustainably, then we don't need to be at a restrictive level anymore. We can move back to a neutral level, and then below a neutral level at a certain point. I think we of course would be very careful about that. We'd really want to be sure that inflation is coming down in a sustainable level. And it's hard to make. I'm not going to try to make a numerical assessment of when and where that would be, but that's the way I would think about it. Is you'd stop raising long before you got to 2% inflation, and you'd start cutting before you got to 2% inflation too, because we don't see ourselves getting to 2% inflation until all the way back to 2 until 2025 or so. So
markets started selling off right after this response from Powell. The markets instantly assumed this means no rate cuts until 2025. That's obviously not what Powell meant by a long shot. What Powell actually said today was quite encouraging, and before this question and ultimate answer from Powell, markets were green and pretty happy about what we had heard. What we heard from Fed Jerome Powell, the biggest statement that caused this bullish reaction was, quote, depending on the data comes out between now and then, meaning the next meeting, we're going to have 2 labor reports, 2 economic reports, 2 inflation reports. It's not until 8 weeks we get the next Fed meeting. Fed Powell said we're going to have a lot more data to go off of, and that we may pause or we may raise rates. It just depends on the data. The simple kind of leading us on of maybe we get a pause was enough for the markets to rally. And when you look at the broader S&P and the NASDAQ, under the surface, a lot of your small and mid-cap stocks are actually moving higher, even following this sell-off in the broader markets. So was this good or was this bad? Well, the 2-year Treasury is down 5 basis points on the day, which is pretty good. The 10-year Treasury is down 5 basis points on the day. This is creating looser financial conditions, helping your credit markets, which also helps Tesla out quite a bit. But Fed Jerome Powell said a couple things that I find particularly interesting. Number one is that the Fed staff no longer is projecting a recession. This was apparent in the last few meetings now. Fed Jerome Powell and the Board of Governors started to expect the recession, especially after the banking crisis. And it looks like the banking crisis is just not having that negative effect on the economy that they thought it would have. So recession does not look like the most likely outcome. Fed Jerome Powell also says that 2% inflation is his base case without major job losses that we have seen in times in the past. This, I should say these are much bigger comments now that inflation is 3% and we're closer to the end. This is not as much of a projection as it's a reality of what we're currently seeing. We're not going into recession. Inflation is 3%. The Fed's in very restrictive territory and closer to a pause and an eventual cut than you were at a year ago. These statements hold a lot more weight than a year ago. Fed Jerome Powell says monetary policy will likely need to be more restrictive for longer, saying, quote, I would say that what our eyes are telling us is that policy has not been restrictive enough for long enough to have its full desired effects. We intend to keep policy restrictive until we're confident inflation is coming down sustainably to our 2% target, and we're prepared to further tighten if that's appropriate. Fed Powell says that they can afford to be a little more patient given how far they've come. We can afford to be a little bit more patient as well as resolute. But if you really wanted to just sum up what we heard from Fed Jerome Powell today, it was a lot of the same that we have heard from other past meetings. Besides, inflation is falling considerably, and that the Fed is considering a pause at the same time they're considering a hike. It's all dependent on the data. So this makes the data that much more important, which is the same predicament that we have been in for months now. It's all about the data. As far as the markets, I think this is enough to at least hold the gains, if not see your small, mid-cap stocks, your growth stocks start to outperform. Because bottom line, without that one question and answer from Powell that caused the markets to fall, markets loved what they heard. This was really good for growth because Fed Jerome Powell was basically saying rates are going to go down. They are at a level of deep restrictive, and they will start cutting rates before inflation is at 2%. Inflation's at 3%. Markets will start to look forward to lower interest rates. And that's exactly why the 10 and 2-year bond yields are falling today. That is good for growth. When interest rates fall, well, you don't really have any other alternative. That was known as TINA. There is no other alternative. That's a real saying in the markets. When bond yields fall, it makes growth a lot more attractive because you don't have that 5% safety net, that guaranteed yield, especially if economic growth is subdued. Well, where do you get growth? In growth stocks. So your stock-specific names probably start to do better than the broader indexes. In regards to Tesla, I think Tesla, again, as I have said in previous videos, fits this build of what you want to be invested in perfectly. You want to be somewhat defensive. You don't want to invest in dog shit companies. I think that's the best way to put it. Tesla is far from a dog shit company. Tesla is growing at rates that are unprecedented in big tech land. Tesla is in a league of its own. And again, it's not dog shit. It's high quality. As interest rates fall, this means less price cuts for Tesla cars. This means better margins. And ultimately, Tesla's selling more vehicles and expanding their business. When interest rates also fall, that CapEx is not going to look as bad if Tesla can raise money at cheaper interest rates. It's not cheap to build gigafactories in Mexico, Indonesia, and India, or wherever they ultimately decide to build these factories. You're talking tens of billions of dollars. It's going to help interest rates falling for companies that are investing a lot of money. And Tesla, again, fits that build pretty damn perfectly. Tesla's stock is basically flat here on the day, down about 0.25%, not really seeing the biggest reaction. These type of events, when Fed Jerome Powell speaks, or CPI, or just any other big events in the markets, it takes a little while for the markets to fully digest what this means for specific names and specific sectors in our markets. So it's not a big shocker. You're not getting this face ripper rally after Fed Jerome Powell in stocks like Tesla, stocks that stand to benefit the most. It could take a couple days. It could take a couple of hours. But I think you will start to see a tailwind effect to Tesla that helps the stock stay higher and trend higher. Ultimately, we have more economic data this week, as well as big tech earnings. Meta is up over 5% here in the after hours and reports an 11% jump in revenue and issues optimistic guidance for the third quarter. Top line revenue came in at $32 billion. Analysts were expecting $31.12 billion, and the EPS came in at $2.98 per share. And the estimate was $2.91 per share. Daily active users, 2.06 billion versus the expected 2.04 billion. That's a beat. Monthly active users came in at 3.03 billion versus 3 billion expected. That was a really good beat. Average revenue per user came in at $10.63 versus $10.22 that was expected. Meta said revenue in the third quarter will be $32 billion to $34.5 billion. Analysts polled before the report were expecting third quarter sales of $31.3 billion. The bottom end range of Meta's third quarter guidance was better than the average consensus. That suggests growth of at least 15% from a year earlier. But what caused Meta to fall from the highs that we seen in after hours was the fact they said they expected payroll to grow, which they've been laying off workers. So how does that make any sense? We'll need some clarity on the guidance call or the conference call, as well as Meta said they expect to lose more money in Reality Labs, which that was one of the reasons why Meta fell in the first place. So we really need more clarity on the conference call, but as of right now, this looks like a pretty positive for Meta. Tesla closes the day flat today, down 0.35%, down 11 cents in after hours. Pretty muted day. Tesla stock at $264.25 per share. But you did see a lot of increased option activity today. Positive order value 62%. 553 orders totaling $244.3 million. So this is better than not. This is showing hedge funds, institutions continue to load up on Tesla options, and that's a good sign for what is to come. Tesla has seen a correction of almost 12% from the highs. So from here, what can we expect? Well, for starters, as I mentioned in the beginning of this video, Tesla is going to see a positive effect from the Fed. Now, today we had the Fed meeting itself. We heard from Fed Jerome Powell. It's going to take some time for this digestion to play out and for investors to move capital around. It doesn't happen overnight. It doesn't happen instantaneously, but odds are Tesla continues to go higher from here, even considering, look at this trend line that I've had drawn up here for the last week or two. You bounced right off of that today. Almost perfectly, down to the penny, bounced off of that, although you did find resistance at that 265. A break above 265 more than likely leads you into the mid 270 range. The best way that I'm looking at this right now, the best way I think every one of you guys should look at this is, hey, this is an opportunity to load up on Tesla before the markets realize the good news that we just got. And the good news is lower interest rates, better demand for Teslas. Tesla doesn't have a demand problem to begin with. So imagine better demand from here. Imagine the order books start to grow on Tesla. That's going to be very bullish when that happens, to say the least, for Tesla's actual stock price. At the same time, earnings that we just got for Tesla. Lowered the valuation by a couple points on a PE basis because Tesla beat on that EPS number so much better than analyst expectations. That made the stock cheaper. So it looks more attractive even at these current levels that it's at right now. But the economic data is going to be coming in hot and heavy as well tomorrow morning. 8:30 in the morning Eastern Standard Time tomorrow. Durable goods orders month over month will be coming out for the month of June. You're expecting 1%? Well, if it's over 1%, that's good. If it's negative, well, that's going to be really bad. In 2023, this is a different market than 2022. Investors want to see good economic activity. They want to see positive economic growth. If you start to see signs of a recession, well, that's one of the things that could cause the markets to fall, and could cause the markets to fall quite a bit considering we have rallied so much here in 2023. You really need good economic data. That's what's going to make the GDP growth rate quarter over quarter, advanced numbers for Q2, so important tomorrow as well. You're expecting 1.8%. Expectations, pretty high. If this number comes in under expectations, you're probably in for a rude awakening in our markets. If this number comes in better than 1.8%, maybe 2%, or even higher than 2%, that's going to be a huge positive to the markets, and I would expect everything to react pretty bullishly. At the time of recording this video, the dollar amount sold short in Tesla is sitting at $24.5 billion. This is still, even after the 12% drop we're seeing, up 65.5% in the last 3 months. So short sellers continue to have massive losses in Tesla, and I think even if you don't get a squeeze right now until we get the next big event, the next big catalyst for Tesla, I think just incremental shorts covering could be something to keep Tesla stock at these elevated prices. It's going to be, to some degree, a level of support. Let me put this into a little bit of context. Retail investors bought about $11 billion worth of Tesla stock in 2022 as the stock was basically falling the entire year. Well, $24.5 billion is more than 2 times $11 billion. So it's a lot of money. Elon sold about $22 billion worth of Tesla stock to fund the buy of Twitter. And that is even more than that that's currently sold short. So it's a very, very, very big number. One of the largest numbers that you will see on big tech. Likely leads to a little bit more support and cushion for Tesla, which does make buy the dip a little bit easier to actually do. I wouldn't expect to see a continued fall from here, especially since we're seeing pretty good earnings. The biggest potential negative catalyst that we have right now is earnings. The only big tech name that we still have left that could cause the markets to fall is Apple. To a lesser extent, Amazon and Nvidia. Well, Nvidia could be pretty big just considering AI. But those earnings are probably going to be okay at the very least. Probably not going to be a jaw dropper, bad quarter from any of those companies. So the market's just massively de-risked. Massively. Huge, big time. Your biggest bearish catalyst did not give you that crash. So I would be careful betting against Tesla right now. So ladies and gentlemen, that is going to do it for this video. That is what you need to know here on the day. All of the news with Tesla, what Fed Jerome Powell had to say, Meta earnings, the economic data tomorrow, a little bit of the data behind Tesla, like the option activity, the short interest, as well as some of the technicals. If you guys like my perspective, or at the very least want to make more money and stay up to date with everything going on with Tesla as well as the broader markets every single day, well, this is your one-stop shop, your place to be. Hit that subscribe button as well as like the video on your way out. If you guys also want to come trade with me live in real time every time I make a trade, link down below in the description of this video as well. You guys enjoy the rest of your day, and I will see you in the next one.